Natural gas prices extended their decline on Friday after a sharp drop on Thursday, the last full trading session before the July 4th Independence Day holiday, with U.S. markets effectively closed on Friday. Traders reacted to a bearish EIA storage report that confirmed inventories remain well above seasonal averages despite rising summer cooling demand and warmer weather forecasts. The bearish tone was reinforced by strong U.S. gas production, steady at 107.4 billion cubic feet per day and up 3.3% from a year ago, while demand remained weak at 74 billion cubic feet per day, down 5.4% year-on-year. This imbalance between robust supply and sluggish demand limited the market's ability to react to supportive weather trends and kept any upward momentum in check. Despite the bearish EIA report, traders continue to monitor weather models closely. Weather forecasts show above normal temperatures across the west for July 11th to 15th, followed by a shift toward warmer conditions in the eastern half of the U.S. from July 13th to 19th, which could lift power sector demand. The Edison Electric Institute reported a 3.2% year-on-year increase in lower 48 electricity output for the week ending June 28, suggesting strong potential for cooling demand during peak summer heat. LNG flows to U.S. export terminals remain steady at 15 billion cubic feet per day, up 0.2% from the previous week, providing a stable source of demand. However, Europe's gas storage levels are currently 59% full, below the 5-year seasonal average of 68%, which may limit the near-term bullish impact of U.S. LNG exports. Meanwhile, Donald Trump signed the One Big Beautiful Bill into law on Friday at the annual White House 4th of July picnic. This bill may set the stage for a long-term bullish outlook for natural gas by rolling back clean energy incentives, accelerating LNG export approvals, and unblocking pipeline projects that have long constrained Appalachian supply. Over time, this supports higher demand from power generation and global exports, tightening domestic balances and lifting prices. However, in the short to mid-term, the bill may lead to a surge in production as new pipelines come online, particularly in the Northeast. With storage already above seasonal norms and demand growth slower than supply expansion, this could put downward pressure on prices. LNG projects will take years to materialize, while a new gas supply could hit the market much sooner. This creates a risk of oversupply through 2025, especially if weather-driven demand remains mild. The result is a two-phase dynamic: near-term price weakness from increased production, followed by a more structurally bullish setup once export capacity ramps up. Traders and investors should be cautious in the midterm but positioned for long-term upside. Here are the top U.S. stocks poised to benefit from Trump's Big Beautiful Bill and its bullish impact on natural gas, broken down by category. These companies stand to benefit directly from expanded U.S. LNG export capacity and streamlined federal approvals. These firms transport gas, and Trump's bill revives long-blocked pipeline projects, especially out of the Marcellus and Utica. These producers benefit from both higher prices and new infrastructure that allows them to sell trapped gas at better margins. Here diversified majors with LNG and gas exposure. Want broad exposure? These ETFs hold many of the names above. Natural gas failed to hold above $3.50 on Thursday, slipping back toward support near $3.30 and signaling ongoing technical weakness. The 50-day moving average remains above current levels, reinforcing resistance and limiting upside unless hotter weather drives sustained increases in cooling demand. In the short term, the outlook stays bearish, with a potential retest of $3.30 likely unless persistent heat across the Midwest and East significantly boosts power burn. A break above $3.50 would be required to shift the near-term view toward neutral or mildly bullish. Traders should monitor updated weather models, daily production figures, and LNG export flows for signs of tightening fundamentals. For now, strong production and above-average storage levels continue to weigh on prices, keeping the market under pressure heading into the next full trading week. Nevertheless, some bulls might try their luck with a counter-trend move, clinging to the long-term promise of Trump's Big Beautiful Bill as if it can magically override the reality of bloated storage and relentless production. But with fundamentals this soft, any rally attempt is more wishful thinking than a market shift. Please like, subscribe, and comment to support the channel. See you in the next one.